Short exercise 7-10, cash payments journal. Now remember the only transactions that go in the cash payments journal are when we are paying cash. And because cash would be going down in every transaction, they have a dedicated column to cash being credited. And of course, if cash is being credited, it's going down. So our goal is to enter these transactions into the cash payments journal. January 5th, we issued a check. So check 430, January 5th, to purchase equipment. So equipment is going up for cash. Cash is going down, so I can copy and paste that. For the cash payments journal, I always like to do cash first since cash is always affected in the cash payments journal. And so we look for a equipment column, and notice there is no equipment column, so that must mean they don't often purchase equipment with cash. If they did, they would have a dedicated column to that. So we're going to put that in the other account, equipment, and then the debit is $1,700. Next, January 7th, purchased inventory for cash. So inventory is going up. So let's put in the January 7th, check 431. Cash is going down by 450. So then we can find an inventory. Now if inventory is going up, then we want inventory being debited. So a lot of students will just assume it's this account. But no, it's not this account, or excuse me, this column. It's not this column because in this column, inventory is being credited going down. So we need to go over here to account debited. This is the other account. Choose inventory, and then for the other debit, notice this debit is here. We put 450. So 450 inventory is going up with a debit. Cash is going down with a credit. Next, January 18th. Check number 432. Now this one's more challenging. So paid CAT company, so CAT company, if we're paying them, they must be a vendor. The amount owed, $775, less a $100 discount. Issued check 432. So it says the amount owed was $775. So we have to lower accounts payable by that amount, $775. There is also, also notice it said we paid them the amount owed, $775, less, so minus $100. So what's $775 minus $100? $675. So cash is going down by $675. So we have a debit of $775. We have a credit of $675. So we need a $100 credit. Now, what happens when we pay early and when we buy inventory? We pay early and get a discount. The cost of inventory goes down. So we have to find inventory. Here's inventory. Is it going down? Inventory goes down with a credit. So the discount amount is lowering the cost of inventory by $100. And then because AP is being involved, we have to say over here who the vendor is, CAT company. And then finally, January 28th, issued a check number 433 to pay utilities for $260. So we're paying $260. Let me move this up so I put it in the right column or row. We're paying $260. What do we pay it for? Utilities. So let's see if there's a utilities expense column. There isn't. So we have to choose utilities expense over here, and then notice this cash is being credited, so we need a debit, and so we're going to use the other account's debit, and that is utilities expense going up by $260. So that looks good. Check our answer, and then in the next problem we'll take the same cash payments journal and we will post it to two places. One, the accounts payable subsidiary ledger, because there's an accounts payable column, and then we'll post everything else to the general ledger.